period of half, and more importantly, they're shortening the time, because we know that the time is the biggest cost of the investment. So this is our today title. So what is mortgage management? So actually, do you know that what is the mortgage management normally? So others people will say, hey, normally I get a loan from the bank, so I just make the repayment every month. But because the mortgage need to make the manage because of the interest rate is fluctuated. So actually the Bank Negara is announced another of the interest, another reduction of the overnight policy rate that we call it OPR by 25 basis point to 1.75 on July 2020. So that is the fourth time of OPR rate that has been decreased in 2020, pushing it to the lower record for the property market. So if let's say, if the mortgage are not managed well, it could be extended due to the increase of interest rate or any additional charges, insurance premium, or any penalty charges on the loan account. So that's why normally the people will make the 30 years tenure of the loan amount. So they just make the repayment every month by month, but they didn't aware of their own mortgage statement and their own mortgage loan account. So through here, this is the chart which show all the different interest rate through the year. Let us see how the interest charges affect your loan account. So we have an example for you. Here with the example loan amount with 500K. So we can see through here, the loan tenure is 30 years. So, and the original interest rate is 4.61. So imagine, just imagine, today the bank is just tell us, because we signed the letter offer, he just tell us we have to make the payment for 2,566 ringgit. So actually the interest portion is already take about 1,920, and the principal portion is about 645. If let's say the interest rate is slightly increased up to 6% until the 6%. So if we just make the payment, the repayment to the letter of, just follow the letter offer 2,566, our interest portion already take the part of 2,005, and the remaining 66 ringgit, that is the principal portion. So this is the case, and all the complaint case in the market, because they can't make all the repayment in 30 years. They can make in the time they can finish their own mortgage. So this is the problem where the people are facing right now. So we can see through here. So many of them, they are just make the complaint, hey, why I have already made the payment for 30 years, but I still have a loan amount in your bank in the outstanding. So this is because within the 30 years, they didn't manage well their own mortgage account. So normally for the repayment tenure, we know that in the market there's about 25 years to 35 years right now. So if let's say the mortgage loan is going to extend, how long does it take to pay off for all the property? So we can't change for the mortgage structure actually, but we have a way. We have a way to let you know how to shorten the 30 years mortgage loan to 15 years, even the half or even the 25% of the tenure of the year. So we have an ideas for you. It does not need for refinance, no huge amount for fund needed, and no need to change your existing service bank. Actually, this is a case study that we can show you. The owner checked his statement, so we can see through here. The owner checked his statement on 2018 January. The outstanding balance is 383K. So this owner is paying 2,000 every month, 2,000 every month. But the interest is, because we just say that the interest is fluctuating by daily interest. So there is interest charge is different every month, 1,400, 1,300, and 1,500. But the owner is paid 2,000 every month. So after 1 year of repayment, he found that he only managed to pay his principal 5,000. So in 2019 January, the outstanding amount is still have the outstanding amount for 378K. So that means out of the 24K, the 5,000 only make to the principal, and 19,000 is going to the interest. So this might be a normal section for a person that they say, hey, I make a loan from bank, so this is the interest charged by the bank. But is it that is a fact or anything that we can do? Here are the details. So for the just owner, he make the loan for 420 months. That means for 35 years. So we can have a details here. Number of installment pay already paid is 40 months. We can see over here. Unfortunately, even he pay on time, he still have to extend his tenure for 415. That means he still have a balance of installment of 415, which means that he has already extended for 35 months. He loan from bank is 382. So here is the total balance principal is 382K. That is the loan amount from bank. And together with the balance of interest, actually the total balance payment is right now is 790K. So through the system, now we advise him to pay follow our structure. Only extra payment from 30 to 150. We can see through here, the first to 5 years. From just now 2000 and increase to 2029 until 2118. So this is the budget between play around. So if he just follow this structure, he can save the total tenure saving is up to 109 months. And the amount total interest saving is 106K. So just a simple step. They just want to know every month what is their statement coming and what is their mortgage structure right now. So they can do this kind of magic things in their loan amount. So just imagine the extended 35 months. So that means we have extended for 35 months. If every month is paid for 2,000, right? So 35 months times 2,000, that's equal to 70,000. This 70,000 actually is we just give to the bank because of our mortgage is going to extend it. Actually, this 70,000, we can going to buy a car, we can going to for a travel with a family, or even we can go for the property down payment. So this is the extended part. But for the months of installment save up, we just now say we save up to the 109 months. So we have shortened our months of the property. So we no need to make the payment to the bank already. So 109 months times 2,000, actually we save this one is already up to 2018K. So just now is the cherry part of all our case before. So let me show you all some facts with the real statement. Normally, we said that MCO, because of the MCO, here now is a MCO 2.0. I hope everyone is fine and stay safe also. So let me say, this during the MCO period, so this customer that is going to take the moratorium. So everybody, we know that after the moratorium, we know that the interest is still charged after the 6 months. So we see through here, even April, May, or June, the interest is still charging over here. But do you imagine that how long will the loan tenure be extended after the 6 months of moratorium? So all the interest charges have been charged into your mortgage account. But in the mortgage account, there will be charged another interest again. So that means that if you stop for 6 month installment, it should be more than 6 months that you have to pay for all the 6 month interest together. So this is another example. So some people told us they know the way to pay faster or make the early settlement. That's very easy. So they will deposit a big lump sum amount when they get the bonus. So even this customer deposit for 30,000 in one lump sum. So we saw that the 357K, even the outstanding over here. So after he make the 30,000 deposit over here. So the difference between the interest, you see the interest. When we make the outstanding for 359K, the interest is charged for 1,218. So after I make the 30K in the mortgage account, but the interest is still in 1,211. So the next month only 1,141. So there's no big difference between the interest. That means that your 30K put in your mortgage account, is it take the effectiveness of your purpose? Is it can make the interest saving purpose to you? So this is another thing that we have to think about it. And because of it, everyone should take your own statement, should take your mortgage own statement to see about it. So you have to know more about your mortgage account. We don't do the mistake this after 30 years we only take it out. I I still own a bank money for 200,000. So there's a better way or better practice for us to take it out the statement every month to see how is our mortgage structure right now, and how is our loan going right now. Is it on track to make the payment or repayment? So this is the purpose that, or awareness that we have to do, the awareness to all the person who have the property, to know their mortgage account very well. So this is another case. So we can see that. So this client, she is going to get the public bank loan. We approached her before in January 2020. That means the last year in the January, but she didn't take up this service. So she just monitor on it. She take their own account and the statement. So after the 6 months, she just pay as normal and even pay a little bit more. So after the 6 months, total pay for 74,000. She find out the principal is deduct for 38,000, should be okay, right? But after the 6 months, that means in June, she try in our service. So the August until November, in 4 months, she total pay for 59,000. But with our methods and with our structure, the total outstanding balance from the original one, the principal is deduct 45,000. That means she pay for 59,000, she can get the deduction of principal is 45,000. That's the effective way that she can see immediately. So after the 4 months trying, she very confident with our this kind of structure and the ideas and the way to provide to her. So she just follow everything what the system is going to ask her to pay, the amount, the date. So she just follow. Then she get this kind of effect. The principal can deduct 45,000. That means about 75% is going for the principal amount. So actually a lot of different case study that support of this kind of way, because this is a proven way that we know that we just follow the structure and we through the calculation, and we know how to make the principal with a very effective way. This is another case. So this case, there's a bit this is an Indian guy. So the first mortgage, the first installment date is 2005 in August. The loan amount is not very big. There's 97,000 in 2005. But after 14 years, she make the payment for 651 with the MRTA together. So the total loan is about 97,000. So after 14 years, she just make the payment every month. But after 14 years, she checked in 2019. She found that she still make the outstanding to the bank is 92,000. She's shocked. Actually, she is shocked. So what happened to this? So actually, maybe it's something happened in the middle of the structure of the mortgage. But we can't define anything because we didn't aware of our own mortgage account. So we can't find the reason why. Because we have to see through, is it any penalty charges over there you didn't make the payment, or any insurance charges you didn't make the payment? So she don't know. She just make the payment every month, but she didn't aware when the interest is going up, or interest is going to make another payment. She have to increase for the repayment. So this is the effect of we didn't take care of our mortgage account. So normally they will ask, what is the accuracy of your system together if compared with a bank? How can I see the accuracy? So actually, if you follow exactly to our way, or follow exactly to our amount or the date that we provide to you, you just follow, we can guarantee you about 99% for the accuracy. So this is the case. From the April, this customer is using in April until November, right? So November, she tried to compare together with her existing bank account. So her this existing bank online account one, she checked the outstanding balance is 485, and through our system is 489. That's within the difference is between 3,000 something. That's the variance of 1%. So that means that if the system told you our system can be shorten your time, you can manage to make the early settlement in 15 years. That means your bank account, you also can get the manage to shorten the repayment amount in 15 years. So this is the accuracy of the system that we can provide to you. So actually the main function of the mortgage management, because we can auto trace for the loan interest rate. When the bank is going to increase the loan interest rate, we have the panel of the Malaysia bank, 13 panel bank in Malaysia. So we can do the auto trace, we do the auto synchronize and auto adjust for your monthly installment amount. We will tell you, hey, what is the installment amount that you have to pay and what is the mortgage interest right now. That this all will be automatic calculation one. And auto calculate for your mortgage tenure. You will know that by this period with this interest rate, how long should I going to make the payment for this mortgage account? So actually, for us, right? So we just see this like a waste function, because we know that the final destination for our property investment, what is our final property investment? That's profit, right? So because we know that we need the profit from the bank, we do not need the interest. The more interest that we can save, that means the more profit that we can take from our investment. So this is the way that we control our own mortgage account from the different software, from the technology. So yeah. Okay, so before that, maybe any problem regarding to this system, maybe we can have a Q&A section, so we can answer more and let you know more before we proceed to the charges part.
All right, anybody got any Q&A that actually can answer since he's actually here? Anybody have any Q&A? All right, Anson, I actually have a a friend asking me about this system. What they say, I mean, if after 1 or 2 years, then you're actually discontinue the system.
Okay, so actually our system that's related to the charges one. Maybe I just share the charges and I show you how it's going to work. Is it okay?
Yeah.
Okay, so actually we saw here. Hold on. Okay, now for the just now case, right? So for 300 to something amount for the outstanding amount, the contribution, that means we collect the fees is 1,500. So if let's say, so after the 2 years, so this is the amount that we collect in the first year. So every year we will collect 250 to make the maintenance and do the audit report with your account to see that, is it you on your own track to your own mortgage account. So if let's say after 2 years you want to just stop this subscription, and you want to do your own way, so you no need to make the payment, no need to make the 250 already. So because of the last 10 years ago, they have another way. They collect one lump sum together. So ours one is by a yearly renew basis for your audit report and for the technical support as well. So we can have a flexible option to choose. Is it we can stop after 2 years? Yeah, because we just sell off the property or we just do another investment. We have to stop this one. The plan is okay one.
Right. Okay, thank you. All right. Okay. I mean, just like my when beginning when I was sharing just now that why actually the objective for me to invite this Anson to the sharing about this mortgage saving is, which I think is very important, because most of us, in fact, when we investing in the property, usually we actually leverage on the bank. All right. So by leverage, we say that borrow the chicken to lay egg. Okay, so we borrow the chicken from the this bank, and ultimately that when the chicken actually lay egg at our house, when we make our this the property profit, that actually when we sell with the capital appreciation, but I mean, we actually didn't have a close look at the expenses and also the interest that we have already serving to the bank. Okay, so like every time that in fact this is also a biggest awareness for me. Yeah. All right. So then one of my mentor actually was asking me to settle a lot of my bank loan that which I mean like unlike if you actually happens to go to a lot of gurus, then they say that actually we need to leverage on the bank maximum. All right. But somehow we always actually unestimated the interest fluctuation. All right, and we didn't actually take the time to actually look at the interest that we pay to the bank. So this is a reason why, okay, and because of my mistake that actually I did for the past 10 years. So by not knowing that in fact my property is actually only solely pay on the interest but no principal. So either way, okay, we are still paying. All right. Either we are paying to the system to use the system, or either way, or that we are actually paying to the bank, okay, for prolong the extension of our installment. So this is the part that actually I want to invite you, okay. If you would like to actually know more about how the system work, okay, then we would like to actually get Anson and also their team maybe to go on one-to-one if you actually want to know more about it. Okay, so then if you actually wanted to find out, you probably can put in the chat group for three. All right, so then we will be able to get your contact number privately, or you can send it to me, then I'll actually get them to contact you directly. All right, so basically if you still have any question that actually maybe this is the first time that you are joining this session. All right, so then you probably are shy to ask questions, doesn't matter, you can just type in the chat group. All right, so then since Anson and the team is here, so then you probably can get more information from them. All right.
But Emily, you are right just now, because in this MCO, right? So the property without any outstanding one, that is the only the solid investment for us right now, because you see in this in the last year, because of the MCO problem, so all the property maybe got some problem because they still own the outstanding from the bank.
Yeah, so in fact my biggest breakup is actually in fact one of my mentor have highlighted me many times, okay,
Yeah.
because I try to say lah, I own actually about initially it's actually 20 over properties, but
Whoa.
then I start to like sell it and cash it out, okay, but some of the property I'm actually paying cash, but most
Yeah.
of property, in fact, I'm actually leveraged on loan. Okay, especially if everyone, I mean, like us, if we read the book called Rich Dad and Poor Dad, so we actually usually what we wanted to do is that we want to leverage on what on the bank refinance, right? So
Yeah.
this is the time that actually during the tough time, in fact, we feel the pain. All
Yes.
right. So unless it, I mean, if there's not like normal situation, if the tenant are paying us as usual, for us, we hardly feel the pain. All right. But this time is a very painful time for a lot of people. Is because we are actually, uh, especially the moratorium. All right. So then the interest is still charging. All right, so that's why actually the reason I'm actually talking to Millie is like, how can we help our property owner, all right, property investor, to have this piece of information.
Yeah.
So either way we pay. All right,
Yes.
either we are paying to the expert that they have already gone through the whole system and they know how to help us to save the interest, or we are actually just go back to the same after we walk out from this room, then we are doing the same thing. All right, then we pay to the bank by extending our tenure. So they are two-way. Okay, so if you actually wanted to find out, I think it's good that actually you have a schedule sessions. So this is only an information. Okay, especially information itself is actually it won't create change. All right, the only thing that actually are able to change is you put in action
Yes.
and go and find out. All right, so for some of you you are actually late. Okay, in fact the session we have done the sharing session by Anson just now. Okay, probably if you want to get one-to-one one-to-one coaching, one-to-one information, then probably that you can actually put in your number to private PM me. Okay, so Anson, there's a question here. Is there a guarantee that the annual interest saving will pay for the annual contribution?
Okay, one.
So by one of the audience, YKW.
Yeah, YKW. Is there a guarantee that the annual interest saving will pay for the annual contribution? Yeah, for sure. Because how we say about it, because the total interest that you charge by the bank. So actually we have three options. We can go for 25% of total saving of the bank charge for your interest amount. If let's say today my property is 500,000, right? My interest property is about 500,000 as well. So if let's say I choose for 25% of saving, that means I top up 25% of saving of my interest. That's about roughly about 100,000 plus for the interest saving that I can do. So for our contribution for 500,000, there's about 3,000 contribution fees. That means you just submit for 3,000 contribution fees, you can get a way and ideas and a structure that how you make the repayment to your mortgage account. So there's a guarantee part that what we can do. So every time you can do the accuracy from your bank account from with our system as well. So you can see through the effectiveness of our structure as well.
All right. YK, is it answer your question? All right. Any more question from the audience? Because I mean, if you actually have, then okay, then we can actually handle it here and also give you more information about how it works.
Yeah, actually, we do have a analysis report for all the Zoom section participants. So you just have to maybe just tell Emily, then we can have a one-to-one section and we do the analysis report on your own property. Then we let you to see what is your property now, right, going on track, or what is the mortgage purpose right now. So you will see everything. Even you have two property, we also can see through about it lah. Yeah, so
Okay.
this analysis report will purposely we just free to the one world customer, and this is a more value that we can create for you.
All right. So maybe YK, you can actually drop me a SMS or the WhatsApp. All right. Then you probably also can fill up the form. Then we can schedule a one-to-one and get this Anson and the team to give you help check on your property. So then if you have a few pieces, then that's the time actually for you to actually find out how much you can save. All right. So hope that actually we can bring values to all of you who are joining this session. All right. So if there's no further report, no further questions from the floor, then we will like to end the sessions.